Good morning, everyone. I'm Vince Lancy. It's 8:32. So let's make quick work of this. We're running late. There's the homepage. The market's on the right. Gold is up 1.2%. Silver is down 30 basis points, and oil is up a whopping 6.5%. Those are the markets that matter today. That's a war footing. Buy gold, buy oil, buy dollar. That's Middle East war footing. And silver gets sold in sympathy with that if you're thinking about that, and copper as well. So it's a stagflationary market. Stocks should be down, they are. Yield should be up, yield should be down. They're unchanged. All right, so let's go to the stories. JP Morgan, Iran attack could spike oil to $120. That's our main story today, and it is what it says it is. Also, U.S. bullion banks reaped $500 million in profits from U.S. gold buys. It's more than that. JP Morgan and Goldman Sachs and Morgan Stanley were the primary beneficiaries. Morgan Stanley, the Morgan brothers were taking delivery of the gold for the buyers in the U.S., and the government was not one of those buyers, right, guys? All right, the meat of the story. Last night, Israel sent airstrikes into Iran, targeting nuclear capabilities and leadership domiciles. Couple headlines. Israel official confirms attack targeting Iran nuclear sites. Royal Navy urges caution in the Strait of Hormuz. Just prior to the airstrikes by Israel on Iran last night, oil prices had already surged by as much as 5% to $70. That's Brent. JP Morgan's chief commodity strategist, Natasha Kaneva, put out a note in it yesterday. In it, the bank estimated that oil prices at 70 currently reflect only a portion of the geopolitical risk premium. Oil prices, Brent, are now at $75 a barrel and higher. The post that we put out this morning and sent to everyone is entitled JP Morgan Iran attack could spike oil to $100. In particular, the note highlights the possibility of Iranian oil exports falling by over 2.1 million barrels per day, as well as 20 as broader regional disruptions if military activity spreads. We think it will spread. We'll come to that in a second. Of primary concern is the potential closure of the Strait of Hormuz. Don't think that can happen, but you know what? It's a possibility now. They're right. Under such circumstances, JP Morgan forecasts crude oil prices could surge to between $120 and $130 a barrel. Quick, quick excerpt of a comment on that. We're developing this for readers over the weekend. A couple things intersect here. The behavior of the markets, oil and gold moving higher along with a stronger dollar, that's global unrest. We haven't really had that in such pronounced unison in a while, number one. Number two, if you want to roll your eyes and say, oh, this wasn't a problem before, you're right. It hasn't been a problem since 1990, 1989, since the Iraq One war, when the U.S. announced its presence on the global stage as the global police force. And since then, every oil spike had been lower. Iraq 1, Iraq 2, every other problem. There's never been a problem in the Strait of Hormuz, okay? We'll get into why that is on a map in another conversation. And there never will be in that era. We're not in that era anymore. This is mercantilism. And under mercantilism, or really more appropriately, the U.S. withdrawing, going very, what's the word? Monroe Doctrine. Wait, that's protecting itself. Let's just say withdrawing, spending money on itself, closing shop in various bases. You could say it started with Afghanistan, it started with the pull out of Iraq, right? But in every area of the world where there's a brick, BRICS, every one of those letters, there's a military conflict except for South Africa yet. And every one of those letters, you're seeing the manifestation of the United States of America being less of a global police force. As we withdraw our protection, as we withdraw our influence, and you don't want our dollars, fine. Then you can fight it out amongst yourselves. And the Gaza moment was a moment that I think the Gaza invasion by whoever was working for the Palestinians, and then the counter invasion by Israel. What did the U.S. do? We just said, fight it out. That's a hockey fight. We're no longer in there stopping things. We're letting them play out. And so the Strait of Hormuz, which had been crucially protected for decades, you do not mess with the strait. Um, it's now in jeopardy, and it gets worse. But we'll talk about that another time. The full analysis on this JP Morgan report is in the premium post. JP Morgan, Iran attack could spike oil to 120. Now, that was when oil was at 70. Now it's at 75. So I'd have to say that they might be onto something. They're not always onto something, but they might be this time. Moving on to the next story. The next story that matters for you. Bloomberg put out a story covering the U.S. bullion bank profits. U.S. bullion banks reap five. This is our story. U.S. bullion banks reap 500 million in profits from tariff-driven gold buys. I think Bloomberg called it a tariff panic, continuing to shit on gold every opportunity they can. Global arbitrage and U.S. bank profits amid tariff panic. Right, that's a paraphrase of their title. We have the full coverage there. And it's interesting because the banks that profited were the banks that have been the lowest key in recommending gold, JP Morgan and Morgan Stanley. And then since the repatriation started, JP Morgan said 4,000 it can happen. Morgan Stanley said 4,000 can happen. And now you know who is handling the order. You can read about that as well. The rest of the posts that came out yesterday and today, you could see them. We're moving a little bit quicker today. We did that already. This weekend, coming soon, oil's rise marks the return of destability. I gave you a little preview of that. We're going to talk about that in the context of the Strait and the context of the first Iraqi wars. Goldman's platinum analysis, that's going to be a big featured post. Goldman is split. Half of the bank thinks platinum is a buy and will continue higher. I call that the trading half. The other half, the analytical side, thinks platinum is probably going to go into a range. But we'll break that down for you this weekend. Backwardation masterclass, we're going to do that. We'll do it a little bit quicker, a little bit smaller. End of a COMEX era, that's a think piece we have written. Post-COVID world ditto. And then, of course, the HeartNet walkthrough that we do every weekend, if there is one to do. All right? That's it. Data on deck. You can see Friday consumer sentiment, summary, and final market check. Here's the charts. There's oil trading 72, 73.46. There's gold up a paltry 1.3%, and there's silver down 30 basis points. It's an attractive trade if there's geopolitical unrest and you're a trader and you say, oh, the gold silver ratio is at 100. And now it's back down to 90. We think it's worth 100. And you're going to buy gold and you're going to sell silver. I'm going to tell you how this ends because it ends every time this way. You just don't want to get ahead of yourself. It ends like this. Everyone starts buying gold because of geopolitical unrest and selling silver. Everyone starts buying gold and selling stocks. And then eventually, stocks turn because of relief and they start to rally, and silver acts weird, and you have a spike. It happened in 80, right? The Hunt brothers were involved there. It happened in 11, and that's not a war. That's everyone was buying gold and selling silver because of the Brexit problem. And then when that unwound, silver exploded. So that's pretty much it. Silver, that signal that I had is negated. I am a little tiny bit long. I got long yesterday and I shared that with founders, but I'm not crazy about this, especially with the unrest there. I think it can get a lot worse. And by a lot worse, I don't mean world war overnight. God, I hope that won't happen. What I mean is this could turn into a very chronic thing because as we pull out of the Middle East, as we let them fight it out, there are going to be widening ramifications. So stagflation, 5% inflation in the US is on the table if that happens. China paying higher oil prices. That's stagflation for them. And we can afford stagflation more than they can right now. Uh, More geopolitical unrest. Some small nation gets bombed, and before you know, there's a dirty bomb going off, et cetera, et cetera. Ukraine, Russia's not done. This is a world at war. May not be a world war, but it is a world at war. I'm Vince. Have a great day.